So GNUS is one of the perfect examples for multi-day runners. And right now,
Did you record?
oh, what's up guys, Steven Dux here. So today we're going to talk about multi-day runners. I do see a lot of people have problems asking me how do I really trade them. So today I'm going to list a couple criteria you need to follow and some of the rules you have to follow as well. Before I get into this video, let's start off with the criteria first. So first off, when you are looking at multi-day runners, you want to look for the accurate market caps, and it depends on where you want to short into different market cap zones. I would recommend the beginning cap, which has to be around 10 to 100 million. Then the flow has to be anywhere between 10 to 50 million. Anywhere between 10 to 100 million is okay. If it's over 100 million, it gets a little bit tricky since it has to get really crowded for it to become a flow rotation stock. And if it goes out of 100 million, it doesn't really meet the ideal range. Secondly, we want to look for the minimum extension for multi-day runners. Now, typically, I use anywhere between 2,000 to 3,000% as a minimum. Follow after this, I will give you guys examples of how to really spot for maximum extensions, and it will be examples for that. On to the next point, once you find the max extensions and the accurate market caps and flow, you want to focus on where's the key points of the stock can actually break its own momentum, and you want to look for where is the major support. Sometimes the stock decides to lose 50%, then actually come back. I will get into it later of how to really find the accurate key points. There's about 10 to 15% of the time stock can actually come back and break its own day high. So in terms of risk reward, you have to be really careful to be comfortable with your risk and reward at the same time. So remember these couple points before I get into the video. The accurate market caps anywhere between 10 to 100 million as a starting cap. Flow has to be 10 to 20 million. Second point will be minimum extension range will be anywhere between 2,000 to 3,000%. Third point is on yourself. You want to find at which point the stock is likely to break its momentum and where you should cover as a maximum reward. Once you put this couple points in your head, let's get into the actual examples. So GNUS will be one of the perfect examples for multi-day runners. Before we look at the chart, same thing, we want to look for accurate market caps. So right now it's at $4, so 4 divided by 400 million. The starting cap will be 100 million. Sorry, my mistake is 400 million divided by 4. And flow is anywhere between 10 to 100 million, so it actually fits the criteria. Now let's look for maximum extension. So started at 53 cents, went to almost 12, and that's about 10,000% gain. Now the actual volume begins to trade at June 2nd. This is where the day gets a tons of volume. Normally, that type of volume on the beginning of the spike will be considered as an ultimate support. So in this case, the support will be anywhere between 3 to 4. Now, once we find the ultimate support, we want to look for the key points of the stock is likely to lose its momentum. And let's go into a 15-day chart. As I said earlier, when the stock decides to crack its own support, which is around $8 area, right about here, and we go back on the previous day, the stock actually traded around 400 to 500 million shares on the previous day. Since the market opened, the stock didn't really seem like it's going to gain enough liquidity to break the previous day. As soon as the stock decides to break that 8, this type of support becomes resistance instantly. Shorting after 8, it will be the key points of the stock decides to lose its momentum. This is not the perfect odds for a multi-day runner on the first try because you're risking basically $3 to making another $4. So risk reward is around 1 to 1. Now, since you know the stock is likely to lose 75% to 50%, and you also see the support is around 4. So dip buying at around 4 is not that bad. So once you dip buy around 4, the actual selling point will be anywhere below that $8 area. So you can make about an average by tracking statistics is around 20 to 25%. So you can make around 20 to 25% right here into the bounce, 25%. Then if you short into the bounce, you can make another about 10 to 20%. So plus of those percentages together, you can make in total 85% to close to 70%. It's actually a decent reward for a beginner to grow their account. Especially you can gain large percentages of your original investment. So this is the classic charts for multi-day runners. Sometimes there's different variations. There's a maximum dollar block that I talked about between different market cap zones, and that has to be used into different scenarios. So this one, they filed the S3 file on intraday. That's why it caused the panic, but you can still use the pattern really well just by recognize where the key point is. So that will be all of the points for multi-day runners. Hopefully you guys can take some practice into it. You should get hand of it in about 2 to 3 times, and wish you guys make some profits off this pattern, and I will see you guys in the next video.